Hi, I'm Charlie Paparelli, and welcome to the Charlie Paparelli Show. I'm a 25-year plus professional angel investor. During that time, I've talked to hundreds of entrepreneurs, and I have learned from them how to start companies from scratch and to how to grow those companies that they started from scratch. And that's why I created this show. I've learned that it's all about entrepreneurs helping entrepreneurs. I think that the entrepreneurs have the secrets to success, not the professionals or investors like me, but the entrepreneurs themselves. And if you'd like to not miss an episode, I think the good thing to do is you see I have paparelli.com down there. If you go to paparelli.com and sign up, you won't miss an episode. I'll contact you every time we're going to publish one. Today's topic is choosing the right growth investors. And my guest today is somebody that is a friend and somebody that I'm very excited about is Adam Wexler. He is recognized in the greater Atlanta area as one of those 40 under 40 people. He is an outstanding performer. He's a serial entrepreneur. He created a company earlier that we're not going to talk about, which was Inside Pool, which had a very successful exit for not only for Adam, but also for his investors. He's now a serious player in the daily fantasy sports industry. He is the CEO of a holding company in the daily fantasy sports industry, or DFS, which you might hear about today, called Performance Predictions. That's the holding company. Under the holding company, his first company that is created is called PrizePicks, and it is tearing the cover off the ball. I love and admire Adam because he is what you've heard me say in the past. He said he is a real entrepreneur. And what that means to me is this is a man who can't do anything else. This is what he does. He's an entrepreneur. He loves action. He loves action. And he has created PrizePicks to serve those who are just like him who love action. So Adam, welcome to the show. I'm glad that you're here. That was our gigantic audience behind me that was just so proud to see you here. You're a good man. Thanks for coming.
Makes sense. Yep.
Can we hear you good?
I'm right here.
All right, that sounds great. Why don't we start? Tell me about, we just had the Super Bowl. There's about a lot of people, there's been a lot of pluses and minuses about how the whole broadcast went down. It seemed to be not the kind of game. One of those Super Bowls, we get those Super Bowls are sort of hit and miss as to what's a good game, what's not. I think this one was sort of uneventful, it seemed. But what happened with you and your company on the Super Bowl?
We're on a stretch of 6 straight record-setting months, and we've had many record-setting days along that stretch, and undoubtedly, the Super Bowl was just another record-setting day in many respects. So definitely an exciting day, it's what I told our team was that it represents the type of day that I believe we're going to be having consistently once NBA playoffs roll around in June and July. So we just need to be prepared for the type of volume that we had on the Super Bowl, 4 or 5 months from now as well.
Wow. And that is a pretty dramatic turnaround from where we were the last time that we spoke, if you remember. We had you had just come out of a period where you said, we talked about how sports, literally, this is last year. I think it was around maybe April, May. But you said sports literally turned off worldwide. Okay. And you said, this isn't good for us. And you went through, I think, a furlough. And then you also went through a sort of a bridge money raise that you did at that time with some small investors. And we'll get to that in a second. But I just first want you to give us, so that we get people on board here and they're wondering, well, what is this PrizePicks thing? Why don't you give us an overview of PrizePicks? And you've explained this to me before, but I want you to explain it to me like, I'm an 8-year-old here, okay? Help me out for somebody that's not into sports betting very much.
Sure. So the consumer definition is that we basically created the fastest, most simple, and most fun form of daily fantasy sports possible. Okay. We dumbed it down. We took We basically were very mindful of what the legal requirements were for a real money fantasy sports contest, and we built on top of that. Whereas, some of our predecessors, took the poker model and tried to bring that to fantasy sports and replicate it that way. We said, no, what's the bare minimum requirement of a fantasy contest? And we identified the over.
You brought up the poker model. What do you mean the poker model? So I know
the poker model is essentially what FanDuel and DraftKings did.
Okay.
And they took that model and tried to replicate it in a fantasy sports context. In our case, over under predictions were a very popular format to begin with, and we basically just brought that into the fantasy sports realm. Okay. With once again being mindful of the fantasy sports requirements, which require it to be any contest must include multiple players from multiple teams.
Okay. And so, what does PrizePicks offer, and who do they offer it to?
Yeah, so we like to think of our target audience as the action-seeking sports fans, and this is one where with our game, you're already going to be tuning in to watch sports that night, and you just want to raise the stakes, and we believe we have the quickest means for you to do so. You can find it in both app stores. It's PrizePicks.com on the web. And it's something that you can get in and get out within less than 60 seconds is our hope.
Okay. Yeah, I did look at it. I remember, I'll tell you one time I did when I first met you, that I remember, and you told me, I think we met before that, but the first time I remember meeting you, you were hosting the lunch at the Atlanta Tech Village. And I was so impressed with you and your brief presentation that no one wanted to listen to because they wanted to eat lunch. But I was impressed with it. We talked for a moment after that, and then I signed up for PrizePicks. And not being a fantasy sports guy, I did recognize the over and under. So you're showing what the predicted sort of points were for the different stars that would be playing in the different leagues that you cover. And I think you cover all the leagues now. And then I make a bet on over and under, and I can do a number of bets. I could do best out of 5. I could do a number of things. That's the way I could bet it. But it was a simple thing to do. But not knowing fantasy sports, not knowing points, I didn't get it. But I made a deposit with you, and I said, I'm not going to use this thing. And so I asked for my money back, and I said, I wonder how this is going to go. And you gave me my money back. You credited it back. And I said, this is a straight up organization. They're doing a heck of a good job. Adam's a good guy. So that was when I was convinced I wanted to keep following you because I know you were running a good operation there. But what happened when we last talked is I said, your market literally went away. And that's when we did that Zoom chat for entrepreneurs, which is also on my paparelli.com if you wanted to see that discussion, which was pretty cool. But you raised some money back then because you were profitable up until that time, right? And then you said, oh, my God, I'm going to have to raise some money to bridge this to stay alive. What was that money raise about?
So while we were turning a profit around the turn of the year last year, we were in fact prepping for a VC round in the first half of Q1.
Okay.
And we were literally waiting for the Georgia legislative session to wrap up because there was, some significant talk that there might be a legalization of mobile sports betting in our home state, which is our number one market. And so we're sitting back waiting for that to roll around in the middle of March. That's when the legislative session was supposed to wrap up. And in the middle of March, not only did that not happen, but we also had a Black Swan event come our way. And so, we were flying a little low to the ground, probably lower than we should have been looking back. But it was all because. What
does that mean? You were flying low to the ground?
We were comfortable, especially in our peak acquisition season. We were comfortable, with the business losing, low to mid 6 figures a month. But then, we knew that for all the money that we had, gone in and invested in September, October, November, we could start turning a profit, a couple months after that. But we couldn't necessarily, especially we knew with the way our game is, we can't just completely turn off marketing, come January, February. So we were still comfortable operating at a loss, but it was just a smaller loss, and basically, taking the business to kind of break even right around that time. But we weren't ready with how big the organization was. We were about 20 full-time, 30 part-time, and we were not ready to basically just lose all of our revenue sources overnight. And the fact was that we had been acquiring customers, through February and into March.
Yeah.
Little did we know we wouldn't be able to offer them anything, come the middle of March.
Yeah, there's no fantasy sports if there's no sports.
Yeah.
Right?
So
that put you in a position where you needed money, right?
Yeah. So to answer your question, we were in a tough spot. We were basically preparing to raise $5 million on a $30 million pre-money valuation.
Wow.
And I immediately, went back to our cap table and said, we need to start raising some money. So initially I said, okay, I'll put it at a 20 million cap. Let's just raise some money on a convertible note. That's an easy thing to infuse money into the business. It was already going to be, a reasonable discount off of where we were about to raise from. And nobody would bite, not even our existing investors.
Kidding.
So eventually
After seeing that first quarter momentum that you had, even then, everybody was but it's interesting. We look back now and we go, oh yeah, I don't know why they didn't do it. But if you were in that circumstance then, it looked like the whole world was going to end. It was crazy, man. So I'm just giving a little bit of background for those listeners to say, why wouldn't anybody put money in? So what did you have to do since they wouldn't bite at 20 mil?
So I went down to 15 and still didn't get much of the way of takers. And this is the back half of
investors, right?
Yeah. I mean, and I'm looking outside, but there's definitely, value investors that were out there. You just had to, figure out who those were. And just to give proper context, we had raised at a 10 million valuation in the summer of 2019.
Okay.
We basically proceeded to 3x almost all of our metrics in 6 months, with football season, later that year.
How much did you raise in 19?
It was a small raise because we knew that we didn't necessarily need too much to propel the business to a much larger number from a valuation standpoint. So we had just raised $500,000 on top of what we were. And we were aiming for that, 30 to 40 million range once we would execute as a business. Yeah. And sure enough, we did. And we thought we were, in a good place to go raise that venture round. In late Q1 was the plan. And then, obviously the pandemic hits the States, try to raise it 20, wasn't successful, or a 20 cap, that is, then brought it down to a 15 cap. Eventually I brought it down to 12 and a half. And I still had people telling me that, you need to raise at a 10 million cap. And I was like, there's no way I'm going to take in money considering the progress that we've made over the last 9 months at the same valuation that we did last summer. I know that once sports come back,
and they will come back,
we're going to be just fine.
Right.
And the other thing was, I had people telling me a flat round was an up round in this environment, which
that was the word on the street. That was the word for everybody. Yeah.
For a number of companies that would have made sense, but considering the progress we had made in 9 months, as well as eventually, before we know it, sports are going to return, where we didn't have too much visibility into what that was going to look like. But I'd say following the pandemic in the middle of March, there was about 2 to 3 weeks where it was very depressing. But then you started you started to see, bits and pieces of light kind of emerge because, the UFC, for example, was one of the first major sports back. But even before that, esports had figured out, okay, we'll scrap our live events and we'll just go straight virtual, which is what they used to do. So esports was the first place we could turn. Then we found a great partner in the American Cornhole League that was able to score a partnership with ESPN. And we were able to, do a nice announcement around that. And I mean, literally, the American Cornhole League became one of the original things that we could offer for those sports starving.
That's how you know that you're serving guys that really like the action. They'll even bet on cornhole. I think it's or do over and under. I shouldn't say betting because it's not betting. It's considered a game of skill. Is that what you told me?
It's fantasy sports has been deemed a game of skill. We had that whole wave of discussion, 5 years ago, but over 20 states deemed it a game of skill as opposed to a game of chance. And yeah, I mean, it's a sister adjacent category to sports betting, but fantasy sports, we talk in the form of you place entries to basically, win contests, fantasy contests.
So how did you get these people who you said 20, no, 15, no, 12, I think, is that what you came out next? And they said, no, it should be 10. How did you finally get them to say, no, I am not moving anymore. The discounts are over. So you're saying things started happening in the market, which started to prove that this isn't that your market didn't go away forever. It's now coming back. How did you get these people on board? And what kind of people were the first ones to kind of step into this thing? And how big was the round?
Yeah, I mean, fortunately, the initial people to step in were, and this is probably very end of March, if not, early April, with some existing investors. And I had just, stood my ground, said, we're going to do some form of an up round. So 12.5 was the number.
12.5 convertible? So a convertible note with a 12.5 cap?
Yep.
Did you have any kind of interest rate on it?
Yeah. And, one of my investors, looking back, I think it was a bit aggressive, but I had to pull out a number of stops and I didn't know which little terms were going to appeal to different people. So we put an 8% interest rate on that.
Okay.
Even though that's obviously on the rich side of your typical convertible notes, which we would have normally done at 5%.
Yeah.
Threw that in and trying to think if there was any other special. There might have been like one or two small stipulations that we put in that were a little, enticing for investors, but we were able to start raising some money. So we raised upwards of 200,000 from existing investors and a couple outsiders. And then we had a big investor group that we were engaging in early Q1 come back around and basically, wanted to put in over $500,000. And we went through a couple of, negotiations with them regarding, board composition, stuff like that.
Yeah.
But at the end of the day, we were able to maintain, control of the business. We didn't have to give up control in the process. So that was always a big factor.
Did that bigger group that was the $500,000, did they come in for that same 12.5 convertible, or did they price around?
So we were already in the middle of the raise. So they basically came in on those terms, but their big ask was they wanted a board seat and board observer seats. So
it's a big ask.
There was
bucks, yeah.
Yeah, and we also we were at least at first they had asked for a bit of a liquidation preference that we didn't we weren't going to acquiesce to. And then, but yeah, I mean, the board.
How much did you close that round out for?
So that at the time that round was basically, it ended up being $1 million round that we ended up taking out on those terms.
So as soon as that $500,000 showed up, then closing out that extra 300,000, that went really fast, I would think.
Yeah, our aim was to originally bring in $500,000. But then, as the sport started picking back up, we decided to take a full $1 million in. But before you knew it, when July rolled around, now you had baseball had just returned, basketball was had already scheduled to return at the end of the month. So we basically said, you know what, now's the time. We want extra capital to go step on it even further. So we ended up proceeding to raise a shade over $500,000 on new terms, which were 20 million cap. So now we're stepping back up to where we were heading before.
So now you have two convertible notes that are sitting there waiting for a priced round.
Correct. And there was, we knew that this new round is more around the premise of promise that, the sports are going to return, or there's some pent up demand. And now we needed to just go execute and show people about why we could justify a valuation in the same neighborhood that we were planning to raise before.
Yeah.
And sure enough, we did that. Ever since August, like I think I alluded to before, we're on a tear of now 6 straight record months. And by the time Q4 rolled around, we were ready to basically price it. And not only that, but instead of going the VC route, we thought we were back in firm control, and we knew that our business was something that could be valued in the neighborhood of 30 million. And we basically, created our own term sheet.
Okay.
And
well, I want to step back from that first, because there's a couple of things that happened that I think would be really interesting to other entrepreneurs, because you did something that was, I thought, pretty cool. Is you after you raised that, when you raised that round, okay, at the 20 million, that convertible round, okay, convertible with a 20 million cap. How big was that? You told me how the last one was. The 12.5 was at $1 million, was for $1 million. This one, how much did you bring in the 20 million?
We raised 550 on this plus some pro ratas, so it ended up being 600,000.
600,000. Okay, all the same guys again?
No, a different group.
New investors. Okay.
Yeah. And most of both of those convertible notes were either existing investors or strategic. So we had already, in that first note, we brought in people like the World Series of Poker King Phil Hellmuth. Our big investor was one that, literally is called Parlay Capital Holdings. They were created in light of the SCOTUS decision from 2018 that really opened up this space. And then at the 20 million convertible note, we cap, that is, we brought in the biggest commercial casino from the state of Florida. We brought in more people from the poker.
How did you connect to these guys? Because that's something entrepreneurs always wonder. So how do I get out there? How do I know who to go to? Because you're moving past what I would call the traditional money sources, right? In the startup. So how do you find these guys? How'd you find the poker guy, for example, on the 12.5 note?
Just back in Q2, I think a lot of us entrepreneurs, especially some of us that had, gone to more kind of brand name investors, celebrity types. We started networking with each other and saying, how's it going for you? How can I help?
Yeah.
And vice versa. And the introduction to Phil Hellmuth came from another entrepreneur. Definitely grateful for that. And he was a great help, because a number of his entrepreneurs were relevant to mine, and some that were in my network were relevant to his. So we were just kind of trading some introductions.
So this is entrepreneurs networking with entrepreneurs in the same space to what would be the same investor group.
Correct. I mean, he has a sports related product.
There you go.
And so definitely just trying to.
What about the group though? What about that group that was the $500,000 group?
The most notable.
You, or did you find them?
Yeah, the most notable investor being that group from South Florida. I had engaged with them, 4 or 5 years before, and through another entrepreneur, they had mentioned what they were looking to do. So they had some particular motivation, which was they were trying to bring back Jai Alai, because they were already facilitating it at their casino, which was this very popular sport back in the 80s and even into the 90s.
I went to the University of Miami, and that was one of my favorite things to do. And this is early 70s, okay? I used to go to Miami Jai Alai or Dania Jai Alai. Just loved it. Never knew if it was fixed or not, but I loved it.
So this is now Magic City Jai Alai.
Oh, okay.
Magic City Casino. And they had already created this, and amongst themselves, they had created a fantasy league. So they were already thinking about our category. And the other entrepreneur actually was one who they had approached and said, "Can you create a fantasy game for us?" And he declined. But because our game format is so simple and it doesn't take us much to spin up new markets, we said we would do it. We agreed to do it.
Okay, good.
And in conjunction with that, we said, we'll do it now, but we want you to invest in the business and bring your expertise.
So you created a digital betting platform or a gaming platform for them that they didn't know where to go. Right?
Correct.
That's fabulous. I love it that you said, I'll do this, you do that, right?
Yep.
Cool.
And they've been great. They obviously understand what, regulated industries are all about. And they've been very impressed with our, just how we've continued to grow the business, how we track the business on a daily, weekly basis. So they're I think there's lessons going both ways these days, because obviously they've been running this
value-add investor for you.
Oh yeah, absolutely.
Yeah, somebody that's insider just like you are. But Something happened that I thought was pretty interesting that you did is back then, if we can remember again, we were into this work from home sort of format. So now you got more money in, you started bringing some people back. You needed to continue to develop the platform. You needed to continue to do your marketing. You needed your team. And you said, yeah, I think we could work from home. This is going to work out okay. It's a lot of young guys, and gals, it's not going to be something that they're not used to. Next thing I know, you're calling me, and you're calling me from Barbados, wasn't it? Was it Barbados?
It still is Barbados for me, I guess.
It's still Barbados. You're in Barbados now.
Yes, I am.
Tell me about the plan. Tell me how this whole idea came up, and what your problem was, and what you decided to do. That's better. What the problem was, and what you decided to do. Go ahead.
Yeah. So, there was we knew we could operate the business remotely. That because we had already been hybrid remote, pre-pandemic. Because the fact is, we run a 24/7 business. So especially our game time operation is most often, outside of the office.
Wow.
Whereas we call it our daytime operation and our game time operation.
Okay.
And daytime operation, involves certain teams that don't need to be present, at night. They're your typical kind of 9 to 5 group, like the analytics division. They're not needed at night. But our risk management team and our game operations team and our customer support, those teams are, need to be on. Product team needs to be, on both. So yeah, I mean, obviously we're doing this remote work thing, but, especially as the sports start coming back around, football season's around the bend, I knew that we could get more, we could extract more value and become more productive if we got everybody under one roof.
Okay.
But I shouldn't say everybody. I mean, I didn't think that it was feasible in this environment to get everybody under one roof. But, I would watch these NBA games and I said, wow, this bubble environment that they've created is quite fascinating. You got to think that, a group like the NBA is going to be as ahead of the curve as anybody. And I said to myself, where else could we find a bubble-like environment where we could, remove ourselves from the concerns related to the coronavirus?
Mm-hmm.
And around that time, Barbados was one of just a few countries who had gotten some great publicity about this work visa program that they were initiating. And, they were mainly trying to attract, remote workers.
Yeah.
And I had also quickly discovered, and I had a contact down there that I quickly discovered they had done a phenomenal job of basically keeping the coronavirus out of the island. So they had created this bubble-like environment.
You said you had a contact down there?
It just so happens that I had a former roommate that was from Barbados and had moved back to Barbados. So
I love it. Okay.
Was able to speak with somebody boots on the ground, which definitely accelerated things for us.
Yeah.
And so I put it out to the team and I said, who might be interested, knowing that my co-founder was in a position to potentially make a move, as well as our original employee. And I thought there might be a couple others.
These are generally younger people who are single, right?
Single, yeah. I mean, obviously not bound by leases, whether relationships, kids.
Yeah, you got a whole lot of stuff there, right? Yeah.
Dogs, there's a lot of
dogs. I forgot about the dogs. Yeah.
A lot of things that hold.
So you talk to these people and you say, you take a straw poll, right?
Yeah. So we put it out to the group. And I think another fortunate thing about us was some of our earliest employees were all kind of connected to each other, whether that be from high school connections or college connections. So the moment one or two of them, expressed interest, I think, it was pretty easy to get the third and the fourth and the fifth ones to come along.
What was the offer that you were giving them?
So,
I was always, you're gonna do what?
Yeah, I was always very cognizant of what the optics around this might look like. Maybe a little overly cognizant. I think, and there was two forms. One is what would our investors think, and the other is in our category. the notion of a gaming operator or a gambling operator going offshore has very negative connotation.
I never even thought about that. That's great.
So we were pretty kind of quiet about it to our industry, but then when it came to our shareholders and stuff, I definitely ran it by some of the closest advisors to the business.
Mm-hmm.
And when I would catch up one-on-one with investors, I would drop a mention. And so I think a good bit of the cap table, started to get wind that we were probably about to make this move. And sure enough, we did at the beginning of Q4. And we basically rented a villa. And because of the optics, especially from a shareholder perspective, I said, look, we're not going to have the full team down here. So I don't want to spend the same money that we were going to spend on a normal office environment, which we were obviously saving that money right now. But I said, look, if let's come in a little below that, but we're setting up a temporary headquarters, in this particular location.
Yeah.
And so the business contributed, a portion of the rent, and it basically helped subsidize a villa, which is a 5-bedroom villa, for us to basically work from. And, I invited a couple of the guys to invite their girlfriends so that this could be a smooth transition.
Uh-huh.
And some of them took us up on that for portions of time. And then we also cycled a couple people, in and out over time as well. And I think overall, exactly what happened was what I hope would happen, which is you had us talking about the business over breakfast, lunch, and dinner, and even into
24/7 sort of discussion. Yeah, pretty intense.
Yep. And this is it turned
it's like
into
a startup business retreat, right? I mean, nobody goes anywhere. Here we are.
It turned into an opportunity that you wouldn't even get in a normal environment, which was having us around each other all the time.
How many people were down there?
We had 7 different people that touched the business, that were down there over time. And then I told you we had a couple of the girlfriends join us as well.
Do you think how much do you think that it helped the business? Did it accelerate it, or now looking back, you would have said, even if we didn't do that and we just kept working remote, it would have been the same?
Well, I think it definitely helped in a number of ways.
Okay.
We were, as I mentioned before, we were 20 full-time, 30 part-time pre-pandemic. We got brought down to the bone by early April. And we basically, I think we may have talked about this on our last call, that I specifically, said, these are our must-have resources. These are our should-have resources. These are our nice-to-have resources. So we had to build back up, from our original kind of core 4 that were must-haves. And then we brought in like the should-have layer. But now we're basically just ballpark 10 full-time with probably another 20 part-time, 15, 20 part-time that are kind of waiting in the wings, as the sports come back. Because, for example, some of our part-time guys were NBA or NFL lines makers. So they were just going to come back when those sports were back. Others were support resources
That
where
makes sense.
we needed to have enough demand and enough inquiries to warrant bringing support resources back. But in general, everything came back in a hurry. So by the time, August rolled around, you had full-time baseball, full-time basketball. September rolls around, you got full-time football,
right?
Football, professional and college. And so
don't forget, you still had the cornhole guys.
I think that finally came to an end in about September, which was probably a good time.
And you need to hang one of those cornholes on your office wall when you come back to America and you have your office wall, because that saved your bacon. That was what got you going again.
It's definitely going to be a big part of our story, into the future. And I'm glad to see, they're doing well.
By getting people together, though, it accelerate. It put you in a position to kind of accelerate when everything came back online, is what it sounds like.
Oh yeah. And we knew, even, as we were prepping to take off, beginning of October, we knew that we needed to get everybody under one roof because things were picking up in a hurry.
Okay.
And so we had already started, our month of August was already a record-setting month beyond what we had done in January of 2020, which has our previous record. And And so it was perfect timing that we had, been putting the pieces in place to act on this.
How much different, just from a percentage standpoint, if you don't want to give me the actual numbers, okay? If you look at January, which is where you were just now taking off, you were going to do that $5 million raise at a $30 million pre, all that stuff. You said that August beat January. Like by how much? Like by 10% or 100%?
So I'm just pulling up some numbers right here to refresh my memory, but basically August beat January by probably 30 to 40%.
Wow.
In a number of metrics.
Would that be what you would, if nothing would have changed, if there was no pandemic, would that have been acceptable to you, looking back? In other words, right? If I would have looked in August 2020 and I did 30% more than I did in January, no pandemic, you would have probably been happy with that.
Yeah, but I mean, what came along with the territory was we basically had a 3 months worth of nothing.
Well, I know that. But my point is that the business didn't. It just recovered. In other words, it got back on track to where it would have been had this not happened. I'm not saying that you didn't get hit in the knees pretty hard with, with this pandemic.
And, July, August in any normal year would typically be our slowest months.
Wow, that's true.
But this was the first year you ever had NBA in August.
That's right. You would have been just sitting with baseball.
I've been waiting for football to return.
Help me with this. This is a little off of our subject, but I think it's something that we're going to be dealing with in the future as entrepreneurs. Is now that we've had this cultural change in that we've been forced to work from home. Okay, it was interesting what you did. You said, "Look, I'm a startup. I need to bring everybody together. I need people thinking about this 24/7, just like I am." So you get your core team together and you do that. As you look forward, what do you think it's going to look for you vis-a-vis work from home versus, being all in the same place? How would you advise entrepreneurs on that, given your experience this year?
I think every organization is different.
Okay.
We're definitely looking forward to the day where we can get everybody back in the same office. And at the very least for a certain amount of time, we're definitely, we'll be back in an office setting well before the corporations will be back in an office setting. I think as of right now, we're in the early February. Our estimation is that we'll be back in the office, or hope that most people will be willing to come back, sometime in May, because I would like to think, maybe it's a bit bullish, but I would like to think that if you really want to get the vaccine by the time, middle of Q2 rolls around, I would hope that it can be available for those that are seeking it out. Then again, a lot of, I hate to say it, but a lot of our young people, some of whom are still in college or fresh out of school, basically, took many of the young person mentalities, which is, they're invincible and they'll just get it and they'll deal with it.
And so I would imagine many of them have, right?
Exactly. So a lot of our team has already gotten coronavirus.
Exactly. That's my point. But what's interesting though, is you're saying though, we've been through this cultural change and this pandemic caused it, accelerated everything, this work from home. And you're saying, no, we need to be in one office. That is the optimal way to run my business. That's what you're telling me.
Well, pre-pandemic, and I was always kind of off on an island with this, and I thought it was a very progressive approach. But
now you literally are off on an island. Okay.
Especially with a 24/7 business. And we did our office hours as 11 a.m. to 3 p.m. Monday through Friday. So we were only in an office setting for 20 hours a week. Okay. But those, at least that was the expectation. Oftentimes, people would hang out till 4, 5, 6 o'clock, hanging around the office with each other. It's those key hours where we get some FaceTime that I think are very effective. And then, as I mentioned before, we have our daytime operation, we have our game time operation. The game time operation can, for the most part, be a remote situation. We've learned how to manage that over the years.
Yeah.
But it's the daytime operation that are working on more strategic projects that need some, time on the boards, need some times on the whiteboards just to kind of map things out. And I think we're definitely missing out on that creative collaboration that you don't get when you're.
When you hire those kind of people, are they going to be in Atlanta?
Yeah, we're still making it a point to.
So you're not going to be hiring a guy in like Belarus and somebody in South America and somebody in Silicon Valley. You want your team here.
I mean, most full-time roles, the expectation is we want you in Atlanta.
How about that?
So
cool.
We have a couple people that are set to move to Atlanta that we've recently hired in recent memory. One's from Silicon Valley, one's from Colorado. They're planning to move sometime in Q2 to Atlanta.
So and this is just your opinion, okay? There's no right or wrong on this thing, but if you're advising somebody who's starting an organization, I'm starting a PrizePicks today, okay, is some new company that's a technology-based company. And I'm saying my plan is, we'll work from wherever. So we're going to be completely remote, work from home. What would you say to that person?
If you're trying to create or replicate my business and compete with us, we're going to have a competitive advantage because we're going to make sure that we get that collaborative time face to face in. But we're also going to recognize that we're in the entertainment business, and it's expected that we work some nights and weekends, especially in certain roles at our business. So I'm very understanding of what the expectations are of our people. And I don't want to be, overbearing when it comes to time in the office, basically.
Yeah, but what I'm hearing from you is you're advising other entrepreneurs, forgetting about somebody who's going to compete with you in your business. I get that. And that's what you limited your answer to. But you're still saying that if you're coming out of the ground, it's pretty hard to beat in-person collaboration, okay, during that critical time of kind of birthing the company, if you will. That's what I'm hearing from you.
Yeah, I think there's a couple things there. If I'm going to generalize it and make it a broader recommendation, I mean, I'm a big believer in the value of a strong culture, and I know obviously David Cummings, who's a big voice in town, he loves to talk about it as the biggest competitive advantage and the most sustainable competitive advantage, and I fully believe in that as well.
Yeah.
And I think there's only so much you can do from a culture standpoint remotely. So, I think there's absolute value in getting people, getting your team together. And every business is a little different. And obviously, there's different considerations if you've got people that are, older in age than younger as it relates to this coronavirus. But, with the makeup of our team and the expectations, an in-office environment, makes a lot of sense. And I think we'll do something quite similar to what we did before. Maybe it'll be a 4-day in-office work week moving forward, but I still believe that it'll, for the most part.
I'm hearing all kinds of models, come in, Monday, Wednesday, Friday, come in, shared, hot desk, come in Tuesday, Thursday all day, that kind of thing. But I like what you're saying, which is, I want you to come in almost every day, if not every day, and let's just keep the hours to 4 hours so you don't have any traffic that you're going to be fighting one way or the other. But we do get our 4 hours together. I like that idea. I think that's pretty cool. Let's get back to your business. So then you hit a record high in August. Okay, so all the sports started being played again, even in the what was considered in the past off season, right? So you get this record high, and then you did August, September, October, November, December, and things are just clicking up for you. Okay, so tell me about this. And it was probably just around that time, maybe August, September, maybe. I think that you gave me a call. And you said, we're thinking about raising money. I want to know what your thoughts are around this bigger round that we're thinking about raising. And I came out on one side, and you weren't quite sure. You were calling me, and you were calling some other people. And I said, well, I think that you were saying, should I get should I get individuals in the industry or operators in the industry to invest in me because they understand what we're doing, or should I think about these venture capitalists? And I said, well, I think that there's real benefit in bringing in venture capitalists that know your space, because I think if they came in, because of their connections in the financial world, they can add value to the business vis-a-vis just putting their name on the business. Okay. And we kind of talked, and I could tell you're like, I'm not sure about that, and then we went away. And then I read that you did raise money. Tell us about the decision process you went through for this, what I'll call the growth investment round. Okay. This is where you're going to get a priced round by investors on a term sheet so that you wind up flipping or converting all those convertible notes from the 12 and a halves and 20 caps. But go ahead. I'm sorry.
Yeah. So, I was deliberating for a good while about exactly what that was going to look like, because we looked at what we did in August, and that was before football even returned. And, if we could depend on football staying the course, which they did a phenomenal job, playing through a pandemic, I knew what our numbers could look like with football in full swing. And so we hadn't even though we had just set a new record in August, we hadn't even entered football season. So in September, as I was starting to solidify.
One of the things I left out is you made a comment to me too during that time. You said, look, I don't want to raise a bigger round because I don't want the dilution unless I can get a pre-money at $50 million. At that, you felt like, okay, I'll take money on and take dilution at that. And then that's when we kind of split. I left that off. I think that's a pretty important piece. But go ahead.
Yeah, I think the debate was, do we go? I mean, like our space was warming up. If you looked at the public markets, DraftKings, FanDuel, even an emerging company like PointsBet, their stocks had cratered in April, and then literally everybody was just skyrocketing in the fall. Mm-hmm. And yet the private markets had not gotten any kind of love like the public markets were getting. But I thought that was only a matter of time before we started getting, attention again. And the debate became, okay, the VCs are going to perk up before many of the angel investors perk up, or the high net worths at a large number.
Yeah.
So I could go raise, a comparable round to what we were going to do in Q1. But look, we've made a lot of strides since Q1. I mean, we had basically created a pandemic-proof business at this point. We were setting all-time highs with a smaller team, so we were way more cost efficient. So we're worth more money than we were worth, when we were going to go raise before. So if I was going to go raise VC, it would have been at least at a 40 million pre-money number.
Okay.
But because of the position that we were in, where we thought we didn't have to give up control and we could largely set our own terms, I said, I'm going to bring it down a good bit so that the people that are getting in think that they're getting, and not just think, but are getting a good deal.
How did you determine how much money that you needed?
Well, honestly, the number one determining factor was we didn't want to raise that much, but what we did want to do was we wanted to convert the notes because they were, accumulating interest, especially that $1 million on a 12.5 cap at an 8%. That was going to add up over time. And I thought that we could go raise what was the qualified financing of that would convert the notes, which was $1 million. But if we did it on our own term sheet, I was going to have to do it through collecting, $100,000 checks, $250,000 checks, etc. So we finally settled on a pre-money valuation of $29 million at the end of Q3, which was our second straight record-setting month.
How much money?
New money. For how much? What were we going to raise?
New money. Yeah.
Yeah. I mean, we didn't want it. We knew we didn't want it to be much over 1 million. At the time we were thinking probably let's go raise. We had already raised over $1.5 million. Let's go top that off with another.
So you didn't really need a lot of money. Well, you were doing the raise in order to convert the convertible notes to get that 8% clicker off you, right? And then, and so you just needed $1 million minimum new money in order to get that done.
That was motivation 1A. Motivation 1B, we know we want to pad the bank account, but we don't know exactly how much. It's a bit going to be dependent on what are our customer acquisition costs looking like, and how much do we want to step on the gas.
What period are we talking about? What month are we talking about this conversation?
This is September.
September. How much money did you have in the bank? You remember?
It was probably pushing $1 million.
Oh, so you weren't running on fumes here.
Yeah, we were no longer running on fumes.
That's cool. Okay.
And our burn rate was way down. But
you were still losing. But you were still, because of your marketing money, you were still getting new customers. What were you burning every month?
Let's see. I got it over here. We were, back in August, we were now burning 125,000, which that was our fixed expenses. Which pre-pandemic, it was pushing 200. So we were setting records.
Going negative 125,000. You're saying that was your fixed expenses.
Yeah, in August we turned a profit while setting company highs.
That's what I'm talking about. So when I say burn, I'm saying that it's revenue minus expenses, not just what is your fixed expense rate. Okay.
Yeah,
you didn't burn anything.
Correct.
Oh wow, that's fabulous.
We were padding the bank account in August, and then we started to know, okay, now we can feel comfortable operating at a loss again. So that's what we started doing. September we lost 57,000. October we lost over 200,000. That's kind of how we started to operate again.
Was that money, the losses caused by just pouring money into marketing?
Correct.
That's what it was. Okay. So it was something you could throttle on and off if you had to.
Correct.
To survive. Yeah. Okay. But you proved you can make money.
Yep. And that was a very effective, it gave us a lot of confidence to step on the gas.
And it gives you a lot of confidence to raise money, because you go to somebody and you say, look, this isn't like a crazy bet. You'll at least get your money back. I don't care what the valuation is. We're not being crazy here.
Yeah, we don't need your money. We were coming from a position of strength.
Okay.
And we basically, the other thing was we set the price at the same price point that FanDuel had set theirs at 7 years ago. And yet this was a much more friendly market than when they tried to raise at that price. And they were doing a similar amount of revenue to the, at that point as well.
How do you recognize revenue in your industry?
In our case, it's the money that we make. We call it net gaming revenue, is essentially equatable to annualized recurring revenue.
And that's what FanDuel does.
Yeah, I mean, all of us in the gaming
because you
space,
got all these bets that come in, and you're saying that when everything gets sorted out, how much money we make, that goes in as our revenue. That's net gaming revenue, you call it.
The three lines are handle, which is the total volume, gross gaming revenue, which is what we've made, but then you've got to subtract out the promotional costs, the gifts and rewards that we hand out to our customers, and then you get to your net number, and the net number is equatable to MRR, ARR, in my opinion.
And what was the then ARR when you were setting the this thing at $29 million pre-money?
Basically our net in August was about 300K, so basically 3.6 annualized, and then we were pushing upwards of 400 in September. So we were quickly growing again.
So what is that, like about an 8 to 10 times revenue kind of valuation?
Yeah, I mean, like I think when it came down to it, come September, when we kind of solidified the number, I mean, it was probably more like 6 to 7.
6 to 7, okay.
And yet DraftKings is out there in the market, saying they were being valued at 30x their 2021 estimated revenue for a business that was losing hundreds of millions of dollars per year.
That crazy. Because there's a lot of people that have smaller, have ARRs that are 1 million or 2 million. Then they have in their heads public valuations, right? So they're sitting here and going, well, if I have 1 million ARR, I should be worth 30 million pre. You see? And you're sitting here going, no, I had a 3.6 and I was valued at 29 million. Okay. And that's a fair deal all the way around. But, I've had VCs come to me and saying that this has just gotten out of control. I can't make an investment because everybody wants 25 times, revenue, and they're little companies, right? I mean, they don't have any infrastructure really to deal with. Company can go away. $1 million ARR business is great, but it can go away in 6 months. All right. So you're doing okay. So that makes sense. So then how do you decide terms? And you gave me the pre-money term, the pre-money valuation. You went back to an anchor that was FanDuel. Is that who it was? 7 years earlier?
Yep.
I got that. That's how you got your pre-money. How do you get to any other terms that are in there, like preferences or anything else that might be?
Yeah, I mean, I was not going to move on one X liquidation preference. I know. Yeah. I mean, to me, which is a reasonable thing to do, is make sure the investors get their money first. I got no issue with that, and I had over. I know you're friendly with Kyle Porter, who is an investor in our business as well, and I had some good conversations with him about different preference terms and stuff like that as we were raising last year, and yeah, I mean beyond
was there an interest rate or anything on the preferred?
Nope.
Or it's just a 1X preference. That's it.
1X preference. Yep.
That was the deal. Okay.
Yep.
Then the next question is, and who do you decide to go to?
As far as investors go?
Yeah, I need $1 million.
Yeah.
I want to price around, I'm pricing the round. Like, who am I going to let into this deal now?
Yeah. So we ended up having a couple investors that came back in. But it wasn't easy in October. Even though I
no
thought.
Kidding. I'm serious. That's shocking to me.
It wasn't easy in October. I still had to turn over rocks, and I would say only by December did it start to really become a little easier. And I wouldn't even call it easy until by January, by this past month. Not only did we just quickly blow by the QFE and up until over the last QFE? 2 to 4 months, the qualified financing event of $1 million. But basically over the last month, I've had people knocking on the door trying to put more money in, and I say this ship has sailed. Where were you early Q4?
Yeah.
Had you known about the deal before? And then the other major development for us, and
so
this
was the deal closed?
Yeah, so we closed that round. We announced
how much did you close it at?
We only ended up taking in 1.35 million on top. So in total,
30% more than you were looking to take in.
Well, no, I mean, like back in early October, we were thinking we might take in upwards of 2, but in total, across all three, we basically took in about 3 million over the course of 9 months, and then the big news dropped about 2 weeks ago, which completely validated what we've been saying for a long time, which is that we're significantly undervalued, and our closest competition got purchased for 90 million by a publicly traded company. And we think that outside of them having a larger database than we do, we think we stack up quite favorably against them in almost every metric. So all of a sudden, we think that when you have that happen, and then the same day, there's only a handful of daily fantasy sports companies to begin with, and one of the other ones got a major investment from Caesars. All of a sudden, the sports betting world, online gambling and fantasy sports are starting to collide again, and so we now know that.
But I think what's happening though, as part of this thing, is the people who are in legalized gambling, okay, are actually looking to get into this DFS industry knowing that at some point, or the bet is at some point in the future, states are going to start flipping and they're going to have legalized gambling. So now I've got a property that I picked up at what might seemingly be a discount because it was a non-gambling site. And now I can flip it pretty quickly. Is that kind of what they're looking at?
Yeah, our closest competitor, and they stated this in the big news, was simply they had access to 37 states, many of which had not flipped into legal mobile sports betting. And this sports betting company at the time only had a handful of states, because those are very tightly regulated. They come with big licensing fees. And so, yes, the daily fantasy sports operators can be quite complementary to sports betting operators who tend to be the ones that have much deeper pockets to begin with.
Absolutely. But what you told me is that so you didn't have VCs trying to push their way into this space. It sounds like you just stayed in that network, the industry network, and it worked out pretty well for you. But at 1.335, okay, when you have an October that's burning, you're saying burning, meaning lost $200,000, right? That's cash going out. You can go through 1.3 million in 6 months if you get so aggressive on your marketing that you put yourself in a negative 200K a month sort of situation. Do you have some sort of other, as you call it, QFE sort of planned out here?
Yeah. So one of the other reasons why we didn't go very much over $1 million in that equity raise was we found a phenomenal growth partner in Clearbank. We haven't formally announced this yet, but they are a revenue-based financing firm that typically has served, e-commerce companies and more recently B2B SaaS. And now we are their original gaming client. So we've opened up the vertical for them.
Congratulations on that.
Thank you. And basically their model is very simple. They just look to make 6% return over 6 months. And with a business like us, where we break even on our customer acquisition costs within the first 12 weeks, we've got plenty of wiggle room to basically make those payments and profit.
Well, it's like accounts receivable financing, but it's revenue financing, same kind of terms. Looking for things like this where you can get your ROI back on your marketing dollars quicker than the 6 months.
Correct, and it's a lot cheaper.
I like that.
It's a lot cheaper than any equity financing that we would have pursued.
Yeah.
So these, we every month we match up our marketing expenses, our customer acquisition costs with a tranche of money from them, and they're the perfect growth partner for us in the year 2020 and maybe beyond. Now
what kind of numbers are they talking that you think that they could get into millions of dollars going forward?
Yeah, I mean, just this past month we took over $500,000 from them.
Isn't that something? My God.
For the previous month.
That is something. So you're always drawing down, paying back, drawing down, paying back. It's this in and out that's going on based on your marketing dollars that you spend. I think that is brilliant. How'd you find them?
We had partnered with a RBF as they're known in the summer of 2017. That was more appropriate for that stage. It's called
RBF?
Revenue-based financing.
Okay, go ahead.
And in this group called Rev Up out of the Northeast, their model is more cash and services, and basically they lean into the business. They're growth marketing experts. They put in, at the time it was $100,000 in cash, $100,000 in services. So when we did that small round in the summer of 2015, we had kind of started to dip our toes in with a group like this. And they were simply looking for a 2 to 3x return over 36 months. But they were going to basically help advise on all of our marketing tactics. And they've been a phenomenal partner as well. And they were kind of a great precursor to graduating to a RBF that was obviously way more focused on just the cash infusion.
Well, a couple last questions is one, I don't understand. Why doesn't FanDuel and DraftKings, as the two gorillas in the space, if you will, how come there's still room for you to operate? Why don't they just kind of suck up all of the people that are looking for action that are hanging out there? Why do you have such a fast growth model? Why do they leave that room?
Yeah, the basic answer is daily fantasy sports can mean a lot of different things. And they created one format that they, through hundreds of millions in funding, popularized. We found another type of format for daily fantasy that kind of lives somewhere in between, what you know of with FanDuel and DraftKings and what you know of as sports betting, because our blend of fantasy is what we call single player fantasy. You're not playing against anybody else. You're just simply playing against the numbers, the projections, as we describe it. The main reason that we're not worried about them, entering our space.
So you have sort of a unique game, if you will, compared to what they're doing. They're using the poker model, as you called it.
Yep. We're very different from them. And the main reason we're not too concerned with them, because I do believe they represent the most formidable competition, but they're so busy trying to keep up with the demand in sports betting, which is now their focal point, that this hybrid category in fantasy sports is kind of like, number one, it's just not a focus right now when they've got a big growth opportunity in sports betting. And number two, we're in a more legally ambiguous space. So now that they're so big and publicly traded, they can't easily consider going into our category. It's definitely going to be a risk and reward kind of decision for them to make in the coming years.
So what will happen then is that things start to clear out and this becomes a real category, if you will. Their net values, if the values of their corporations will be so great, they'll be able to kind of go shopping and buy up these smaller categories and just add them to what they're already doing.
Yeah, and we're
because their valuations. What the valuations on these guys like FanDuel and DraftKings?
I can't keep up with their market caps, but it's something 20 billion. I don't know.
Oh yeah. So you're here you are saying I got $500,000. That was their lunch money on Tuesday, right? Exactly. That's pretty incredible. So tell us then. So the state of the industry as you go forward is going to moderate how quickly you're going to be able to grow with this unique game that you've created in PrizePicks. Okay, it seems like you got all the right financing behind you. What kind of projections do you have going forward for your company?
So, last year we basically grew over 100% in all of our key metrics, despite having a quarter almost wiped out. And this year, we think we're going to grow basically, 4x across the board, all while doing so off of, the financing that we've already secured, as well as the growth capital, through debt that we're going to continue to take out.
So if you look out, now you have projections that you could almost that people are now starting to bet on. Versus when you started your business, you said, "Here's how we're going to grow." Right now, you've got some track record here. So if I look out, say so we got 2021, 2022, 2023. If you give me 3 years, you got to 2023. What do you think that your revenues are going to look like then? In August of 2020. It was 3.6 million ARR. What do you think your ARR is going to be in December of 23?
There's a lot between now and then that could happen. Both good and some bad. But no, we're extremely bullish. There's no reason to think that we can't be pushing a 9-figure ARR number within the next 36 months. I would say.
What's a 9-figure ARR number? Like what?
We haven't really. Everything's changing so quickly. I just got our.
I don't know what 9 figures mean. What does that mean?
I'm saying 100 million ARR.
Oh, okay, great. Okay, that's pretty cool.
And that'll
change your revenue multiple.
I would assume so.
Yeah.
So a lot of it is timing the market right. A big market dynamic consideration for us is when are certain key states going to legalize mobile sports betting, because that definitely
changes the world.
It has an impact on our wallet share in certain states, such as our home state of Georgia.
Well, I'll tell you what, you told me, and we'll end with this, but you told me when you were sitting there on your hands wondering when sports was going to start again and just and drooling over sports like cornhole competitions, okay, to just kind of keep you alive, that you really thought that this was going to be, that you'd someday have a valuation of $1 billion. You told me that. I'll never forget that. And you know what? I believe you. You're going to do it, Adam. So thank you so much for doing this. This has been a phenomenal interview. I hope you enjoyed it. I hope this is helpful for you too. But I know you helped a lot of entrepreneurs.
Yeah, hopefully it always helps to hear some stories, but I don't know if I've ever been on record saying that. I like to underpromise and overdeliver.
I think I squeezed you a little bit, and you might have said it, or maybe I'm thinking someone else said it. But
We have high hopes, so I won't deny that I may have had a cocktail and said something.
when are you going to When are you going to grace us with your presence once again and leave your beautiful island of Barbados?
Yeah, hopefully, hopefully soon. Hopefully, the vaccine is imminent. That's one of the bigger reasons why I've remained down here. We were hoping to get some of the team back here in Q1, but unfortunately, they had a bit of a COVID outbreak, and the bubble was pierced, so that kind of messed up some of the plans. And but as it is for myself, who never left, I'm in a pretty safe environment overall, and I would say as far as the coronavirus goes, much more safe than Georgia and Florida right now, unfortunately.
All right. Well, we'll look forward to having you back. This thing is, although I did read something recently that made a lot of sense to me, which is we're going to move from a pandemic with COVID-19 to an endemic, meaning it's always going to be with us. It's never going to be eliminated. It is going to be another strain of flu almost, if you will. But hopefully we'll get past it with some vaccinations and some older people like me, not like you. You're a young man still, that might not put ourselves in a situation where we might actually die from it. But you've done just marvelously through this, and there's nothing like being excited about a market like you are, serving people who like action like you do, and have that market grow on you. That's right place, right time, and you've got obviously a really good team. You got some wonderful investors. I think this ClearBank thing that you found is phenomenal for financing going forward without giving up equity. I think it's just wonderful. So I wish you the best. God bless you. Godspeed, my friend. You're doing a great job. We're so proud of you, all of us here in Atlanta. Thanks.
Thanks, brother. Thanks for having me.
I'll close this up here now. Well, you've heard a great story today with Adam Wexler, and as he progresses from the pandemic to 400% growth this year. Think about that. Man, that's something we as entrepreneurs all dream about. And as investors, we certainly want to be a part of that. I am not an investor in PrizePicks. Now looking back, I wish that I was. But there's a lot of happy investors, and there's some great employees, and Adam is serving a tremendous base and providing great value with a really unique game. So we wish you the best, Adam. And if you're interested in being a part of the Charlie Paparelli Show, make sure you subscribe at paparelli.com, and we'll look forward to seeing you at the next one. Take care.